Hi everyone, so today I'm with Dom again, and we're going to be covering a new company called Harrow Health. Dom is going to cover what the company does and then the current earnings for Q3 of 2025. Dom, whenever you're ready.
All right. Can you see my screen?
Yep, perfect.
Wonderful. So yeah, like Matt mentioned, we're going to go over a company called Harrow Inc., Harrow Health. Just going to go over like a brief description of kind of what they do. This article gives a lot more details about the products they provide, so we won't spend too much time on it, but just going to go over it real quick. So Harrow Incorporated is an eye care pharmaceutical company. They engage in discovery, development, and commercialization of ophthalmic pharmaceutical products. That first word I definitely butchered. The company offers Imprimix RX, an ophthalmology-focused compounded medication. And like I mentioned, it's going to go over a bunch of other products they provide, and that first part is any indication. I probably won't be able to say half these either. So just know that they engage in eye care pharmaceuticals, discovery, developments, and commercialization of their products. So moving on, we'll go over to their Q3 2025 results. Normally, these articles from Yahoo Finance do give us a little more like highlighted stuff, but from the earnings report, they just kind of gave positives and negatives. So we're just going to go over what they think of those. So first thing for positives, the company reported a 45% increase in total revenue for the third quarter compared to the same period in 2024, reaching $71.6 million. Good to see. The company's on track for a strong year of revenue growth with a full year revenue outlook updated to the range of 270 to 280 million. They've secured agreements with several leading national payers, which will improve coverage for its products starting January 2026. The company's preparing 4 new product launches over the next 3 years, which are expected to significantly expand its market reach. And then finally, they built a scalable commercial infrastructure that supports multiple product launches and continued expansion without heavy additional investment. Cool. And then a few negatives that they noted from the earnings call. They say Triessence and the rare and specialty portfolio underperformed this year, including in the third quarter. Doesn't say how much, but underperformed. There's an outgoing dispute with California Board of Pharmacy regarding the renewal of Imprimis RX license, which could impact future revenue. The company experienced an inventory shortage in October, causing a one-time decrease about $4 to $6 million in revenue for the fourth quarter. The company had its full-year revenue guidance to a uh, slightly more conservative range, indicating a potential challenge in hitting the original target. And finally, the company anticipates seasonal declines from Q4 2025 to Q1 2026, which could impact short-term financial performance. So overall, without seeing too many like specific numbers, I would say it's been a decent quarter. Obviously, the positives are going to be a little more like weight on here for a 40% increase in total revenue. Good to see. The outlook, like we said, was a little more conservatized, but obviously still going to be growth. Just going to be a little bit less growth than anticipated. So overall, I wouldn't say too bad based off our limited information here. So
Okay.
now we'll transition to Matt, and we'll kind of take a look at more of the financials of how they're currently doing and see how that's going.
Okay, thank you, Dom. Appreciate it. All right, so like Dom was saying, the earnings were very good, and this is actually going to be reflected here in free cash flow. So right now we have that it's negative 20 million. In the next 3 years, it's going to be positive 234 million. Really good. They're going to be free cash flow positive. It looks like, well, 2026. So yeah, late 2025, early 2026. So yeah, really good for them. And it looks like it's just going to ramp up for them from there on, and it will be a very big gain. Even from a positive free cash flow, it looks like it's going to be, a 4x on free cash flow growth. Really good for them. Financial health of the company, not as hot, unfortunately. Of course, with the nature of pharmaceutical companies, a lot of R&D spending, and that usually means a lot of debt. And that is currently what they have, a lot of debt. And it has been really climbing up since, let's say, 2023, and it's just been going up and up and up. So you have to be a little bit careful of that. They have a lot of cash. They have they have like a medium-sized cash, medium-sized equity, but you do need to be careful of this debt level. It's very, very big, and it even says it here. The debt to equity ratio has increased from 67% to 520% over the past 5 years. Insane. Also, amongst the problems with R&D, you have acquisitions too that lead to this high debt number. So keep in mind of this. Now, the next thing I need to show is where the stock is, right? High, low, what's going on. And right now it's, I think, coming off about a big rally, about 43% rally from a year ago. We have right now that it's the 52-week range is $20 on the low end and then $54 on the high end. Right now it's at obviously 47, $48. So you're getting it at the high end. Probably have to wait for some kind of dip because it has been rallying with the positive earnings report and all that good information. Next, my DCF is going to say that it is undervalued by 52%, which is great. Wall Street forecast is going to say that it's still undervalued by 34%. Also great. So really, however you look at it, it's going to be undervalued. However, there has been a rally, and you're still not getting shares too cheap as maybe as you would want it to be. So you need to be careful of that still. And lastly, we're going to check Tipranks, and Tipranks is going to say strong buy, 7 buys. Just 51% upside, so it comes in line with pretty much simply Wall Street, and yeah, that looks, I would say, overall pretty good. Dom, is there anything else you wanted to add?
Um, nah, nothing else I can really add to this one.
Okay. All right. Thank you, Dom. Thank you, everyone.
Thank you.